What's going on, YouTube? It's the Income Tax Guru, and I am back with another video. If you are new to my channel, I appreciate you for joining in. Welcome to my channel. For all of my returning subscribers, I appreciate y'all too. I'm doing it for y'all. I wouldn't be here if it wasn't for you, so keep doing what you're doing. But before we get started, you already know the spiel. Like this video, comment below, share this video, and subscribe to my YouTube channel. Hit that red button. Do it right now. So I decided to make this Don't Blow Your Income Tax Return segment because I know a lot of people out there get these large tax refunds, and the first thing we think is, what can I spend this money on? We go to the mall, we go online, Fashion Nova, Flight Club, the Gucci store, and we buy stuff that we don't need. And then in 2 to 3 years, you have no clue what you did with your money. Doesn't make sense. I'm here to flip that script, so let's get into it. Guys, go buy a life insurance policy. There's only two things guaranteed in life: death and taxes. That's just what it is. You are gonna die and leave the physical realm someday. So why not protect yourself and your beneficiaries? You can buy a life insurance policy for little to nothing. So I'm 25 years old. I looked online, did some homework. These quotes could be different if you go to a different insurance company, but I'm just giving you guys a quick little average. For a 25-year-old, you could get a policy with $1 million worth of coverage for about $40 to $45. You can get a policy for $500,000 worth of coverage at about $24 per month. This is an average, it could vary. However, that's not a lot of money. $24 times 12 is $288. So if you get the average tax return of about $2,700, you could basically buy life insurance for 9 years. If you got that tax return for 2 years in a row, you could pay for your life insurance for 18 years. That's a very long time. Just think about it. You could cover yourself if something happens to you, your son gets $500,000 or your daughter gets $500,000. They gonna be good. Think about that. It's a wonderful thing to do. I highly recommend it. This right here gonna blow you away. I know it is because it blew me away. So, as I've mentioned, the average tax return is $2,700. So let's say you took $1,000 out of it. We're not even talking about the other $1,700. You took $1,000. You put it in a mutual fund, ETF, or some type of investment, and you make about 6 to 7%, actually 7%, because that's the average return on the stock market. You make 7% on your investment per year, and you add $1,000 a year. So you put in $1,000, you make 7% a year, and you add $1,000 a year. So every time you get your tax return, you add $1,000. In 20 years, you'll have $48,000. So you would have put in $20,000, but ended with $48,000. So you would have made more in interest than principal. You could literally take your money, put it in an investment, and in 20 years, it'll make you money. Now, of course, the more you put up, the more you put in, the more you get out. That's just how it works. But this is just a moderate, conservative example. I mean, you have stocks on the stock market that go up 15+% a year, and this is not including dividends. This is just annual returns. You could take your money and flip it. So you know if you did 2 or 3,000, or you did the amount of the average tax return of 2,700, the numbers will be astronomical. So instead of going to the Gucci store, instead of going to the Fendi store, take $1,000, buy a mutual fund or ETF, and flip it. Guys, pay the principal on your car. Most people get a car, they finance it, have a car note, which is fine. I have one. We all do it. However, you get your tax return, whatever it is, 2,000, 3,000, 4,000, or if you just get the average around 2,700, take it and put it on the principal of your car. I am not telling you to go make your regular monthly payment. I'm telling you to call the bank and tell them you want to make a principal only payment. The principal is the actual amount of the debt you owe. When you make a monthly payment, you are paying principal on the debt you owe, and you're paying interest. The fee that the bank charges you, that's how they make money. No, we don't want to take our tax return and pay interest. That's not what we're here to do. We're here to pay principal. And what this does is, if you pay on the principal itself, you lower how much interest you'll have to pay on the back end because you're knocking out the actual debt. I highly recommend that you do this. I've done it in the past, and this is how I've knocked out my debt pretty fast. It's a really good tool. It's a really good idea. So I think you guys should take me up on that. Quick recap. You know we got to go back over it. So, guys, number one, buy some life insurance. You can get a policy for little to nothing. Pay on it every month. Something happened to you. Your family going to eat. They're going to have money to do whatever they need to do in life. Number two, buy you some investments. Make 7%. Flip your money. Do it legally. Go buy your favorite stock. You might make more than 7% a year. That's just modest. Number three, pay on the principal on your car loan. I am not telling you to pay interest. I am not telling you to pay your monthly payment. Call the bank. Tell them you want to pay principal only. Guys, I appreciate you joining in with me on Don't Blow Your Income Tax Return Part 2. I will be dropping another video soon, so be on the lookout for that. Thank you guys so much for joining in, and I will see you in the next video.